Hey, my name's James Nicholson. Welcome to my YouTube channel. I'm in London today, so it's a little bit of a different venue, and I don't have the whiteboard. I know there's a lot of fans of my £20 whiteboard, but I wanted to make this video for you because the Federal Reserve cut rates yesterday. That's good news. That's really positive for the British or the Bank of England, because the Bank of England like to, what we call, follow the Fed. They like to be aligned on interest rates because that keeps the currencies aligned. If you have them too far different, the currencies will have big fluctuations, and that will cause problems for imports and exports. So in this video, we're going to talk about how much they've cut, what they're saying the expectations are for the next cut, and the economy in America, and the impact on your mortgage here in the UK. That's really what you care about. Now, before we jump into this, if you haven't done already, do subscribe to the channel over there and hit that bell notification. We hit 50,000 subscribers. And by subscribing, you're going to get all the latest interest rate news just like this. You're going to get house price news. You're going to get property investing tips and much, much more. And let's get some views on this video. Your part is simple. All you need to do is smash like, tickle like, do something to that like button. That helps with the YouTube algorithm, and that really does help the channel grow. So thanks to everyone that does that. So, rates in America, the Fed rate, they have a range. But effectively, the lower range is where you're at. So they were at 4%. They've gone down to 3.75%. So that's good. That means that they're higher than us now. And it means the Bank of England could cut and still be close to what sort of range they're in. So their range is 3.75. So 3.75 on the low end. Now, the difficulties that the Federal Reserve has had this month is the fact that in America, you may know, you may not know, depending how much you follow it, the government is actually shut down. It's run out of money at the moment. And so their version of Parliament, the Senate and the House of Representatives, they can't agree on what needs to get sorted. And so they're trying to basically strong arm each other at the moment into getting their own way. And so because the government is shut down, it means they don't have any data. So we don't have the unemployment data in America at the moment. We did get some inflation data, but it's difficult for the Fed. So they're effectively flying blind, as you would say. So here's what they did say. And we can see this because private companies are telling us this constantly, is in America, the job market is cooling. Amazon this week just laid off 30,000 people. There's similar sort of redundancies at Microsoft, all the big companies, Walmart even, who you'd think would have lots of staff. These companies are cutting back on staff, and that's because a lot of it is down to AI at places like Amazon. But in places like Walmart, it's because people are shopping less and because of automation. They've got new things that can stack the shelves now, so you don't need a human. They've got self-checkout, like we've had here for a long time. These are things that they are going to have rolling out in more places in America that ultimately will reduce employment. So that's not good. Now, their GDP, how their gross domestic product was doing, was fairly good over the last year or so. It was 2.4% last year, and this year it's cooled down to 1.6%. So it's slowing down. You can see the American economy is slowing down. It's big, so it takes a while for the data to come through. And so they know that that's going to continue to happen. They know the economy is not strong, and they have a dual mandate, as they say, of maximum employment and stable prices. Pretty much the same as the Bank of England. I mean, everyone says the Bank of England just focuses on inflation, but if you listen to their meetings and their press conferences, which I do, they say exactly the same. Maximum employment and stable pricing, which we don't have at the moment. So inflation is out of control. So here's what they're focused on and been talking about yesterday. Firstly, the housing market in America is weak. That's not been any secret. It's been like that for a little while. It isn't strong in America. It's slowed down significantly. And that means a lot of people are just sitting and waiting, because in America, you get longer term mortgages. I bet we start getting these sorts of things in the UK. So I'm talking about you can fix your rate for 10 years there. And so there's lots of people that fix their rate for 10 years at 1%. And so why would you sell? They might want to sell, they might need to sell, they might have a bigger family, but they're on a 1% interest rate. If they sell and buy something else, they're going to go on a 5 or 6% interest rate. So not very good. So the housing market's slow. Lots of people are waiting for rates to come down. They talked about the government shutdown and said, look, this is going to impact the economy. It's going to hit the economy. It's going to mean more people lose their job because government workers, they're just not getting paid at the moment. They're furloughed. And it's different to the furlough that we had in the COVID, because in COVID, you got paid in the furlough. In America, if you're a government employee, you're not getting paid. And so that's not good. Now, they will get the back pay when it reopens, but for now, they're going to struggle to pay their mortgage. They're going to struggle to buy groceries. And so businesses are going to get less custom from government workers, which is not good. So that's one thing they talked about. And they want that, well, they think that the longer it is shut, the worse. And it's been shut a month now. Tariffs. They've said that the tariffs are impacting prices. Inflation has ticked up to 3%, and they think there's more to come. And so now they've got the difficulty with the job market in America is going down and the inflation is going up. Stagflation is hitting, similar to the UK at the moment. And so they're feeling the pain of that. And they're saying, the Federal Reserve, Jerome Powell, saying, look, these tariffs are starting to come through into pricing. Companies are absorbing some of it, but not quite yet. Now, they've also been widely expected to cut again in December. And one of the first things Jerome Powell started with his press conference was the fact that he said, look, December's not nailed on. We're debating that already, and a lot of us don't think we should cut in December. Some of us do think we should cut. These are the people that make the decision, right? And so they are saying ahead of time that they might not now cut in December, which isn't good. Now, it's more likely that they cut if the government opens. So if the government opens and they've got more data, probably the unemployment is going to go up because a lot of big companies have been laying off people. And so that'll be interesting to see how that goes. What else have they said? What did the markets react to this? Well, there was a 95% chance that there would be a cut in December. 95%. That's already dropped overnight to 67%. The markets are thinking, this doesn't look so likely. And a lot of it is dependent on what data they can get, because they don't really know necessarily what's going on. They can see private company data and stuff like that, but they need the government data to be able to know really what the unemployment is, what the job, like people that are getting social security, is that going up? They need all that data, and it's difficult to not have that. So they're saying, look, there's less chance of a cut in December, but there is a chance. And so that's what we've got to see. So how does this impact British mortgages? Well, the Bank of England is now probably more likely to cut next week. I don't think that they will. We'll see. We'll see what the markets say over the next few days, and we'll update you accordingly on that. But yeah, there's a chance that the Bank of England will cut. There's now more of a chance that the Bank of England will cut this year at some point, whether it's next month in November, first week in November, or waiting till that December cut. But either way, it's more likely that they're going to cut. But the reason either side of the Atlantic will cut is because the economies aren't strong. So don't forget that. That's going to impact house prices. If there's more redundancies, more unemployment, house prices are going to go down. Your mortgage rates might go down, but house prices are likely to go down as well. So that's what's going on in America. If you haven't done already, hundreds of you have done, do join our VIP waiting list. We're launching something very special next week. You'll get all of the details by joining the VIP wait list. All you need to do is put your name and email into the list. You'll get an email to confirm that you're on it. And then when it launches, you will get the first chance to join us in something we're launching next week. There's no commitment by joining the list, but at least you know what we're doing. So do join that list right now. Do smash like, do subscribe, do check out all the other content as well on the channel, including this video right here.